Hello everyone, welcome to your weekly on-chain review. This is your host Sky and today is 15th of January 2022. Let's go ahead and look at some important on-chain data. So today's video is called Forming the Bottom. It's part 2, Conviction and Invalidation. The first chart is the adjusted SOPR. So we can see that the SOPR is evolving below 1. It means that majority of the market participants, they are incurring losses at the present prices. What is interesting is that this is always an area of value in a bull run when the trend is clear. We have seen that whenever SOPR is readjusted and is reset when it reaches 1, that is an area of value if the trend has to continue. We have also seen that in a bear market, SOPR evolves below 1. It only signifies that majority of the participants, they incur losses. Most of them bought the top, and the buyers who bought the top, they are majority of the holders. So we can see here, this was the SOPR in a bear market. This was also a bear market. And this was the last opportunity at the end of the bear market to buy a great value area. And now we see that when the trend starts, then this place becomes the place where you want to catch the dip. Here you see this place. Now here also you see how it comes close to 1. Now also, if you see a longer term time frame, this area, the bear market or a huge dip, this has been an area where high time frame bottoms were formed. You see that in for Corona drop, this bottom was formed. This low, the multi-year low here, this was also formed when SOPR was hitting a new lower low. So this has always been an area where you can think of accumulation. And that's what I am thinking, that accumulation is happening right now. We will see other charts to prove it. Now if you zoom in and see the similarities between 29k, 30k area and right now. So after this huge dip in May, we see SOPR evolved here and then it shot up back and gave this rally. This is what we are expecting here also, that it starts reclaiming this line and starts trending upwards. So this is the short-term holders SOPR in green. In yellow we have long-term holders SOPR, and in blue we have adjusted SOPR. In the previous two charts we were looking at adjusted SOPR. So here you can see that short-term holders are incurring losses, and they have been incurring losses since the first dip from the top of the last rally, and now also they are under loss. Majority of the participants of the market are in loss, and long-term holders, the price is also coming very close to their cost basis. So this signifies that this is an area where it's oversold. The price is oversold, and if the trend has to continue on a higher time frame on Bitcoin, then this area becomes the area of value for us. We have been talking about SOPR, and we were expecting it to evolve after this dip when 53k was lost. We were expecting it to evolve here and form a shape like this. We didn't get any capitulation wick apart from the one we had from 53k to 40k, and after that we have found some strength. So here also you can see SOPR and how it has proven to be an area of value in a trending market. So that's the difference right now. We are still trying to find whether the market will trend, and this first leg will be the first wave of the new trend or the second wave of the new trend. That has to be established right now. Though we had one wave, and then we can say we have a second wave, we made a all-time high and then we came down, but we have to see if it starts trending on a higher time frame, then this has always been proven to be an area of high value. You can see here. Now see in this one, this shape is quite similar. It went up and then it came back down. Here we see that this area was one of the last areas to buy around 9,000 when the price of Bitcoin was 9,000 USD. And then it went up and then it came down again, and we see SOPR eventually left and started trending up, made a higher high and higher low, and this huge rally started. And now the next step was also when the SOPR got reset at 1. So this one area is an area of value. You have to manage risk and take this entry. See here, it's again the same chart. We are just pointing towards how the price has bounced whenever SOPR has reset. In this area also, when it reset to 1 and this rally was given. Here also this rally. When at the top we could have used it. Now we have to use other metrics to find out whether the trend has ended, and in this case, especially in our Discord, we were able to identify it through other technical analysis we used. So yeah, this is the MVRV. MVRV is also very close to our buy zone and area of value. You can see here when it is at 1.5, it formed the bottom here in 29k. When here also when it dropped from 12,500 to 9,000, here also we saw it was very close to this 1.5, and this was the last area of where you could have bought Bitcoin at $9,000. This was also given by MVRV. So we see that whenever this retest of this green line happens in a trending market, as close to it this metric is, that area becomes the area of value in a trending market. In a bear market, you see that this is lost and the MVRV starts evolving below it. So if you believe in a higher time frame Bitcoin to be a successful asset, then if you want to accumulate it for 3 years, 4 years, then always you look for this areas only. You don't want to buy here or when MVRV is here or here, or nor you want to buy when SOPR is very high. So when you're buying for longer term from your spot, of course this area becomes an area of value. Even if you had bought it during the bear market, you could have just hodled it, and that was actually the best place to buy. It required more of a hodling, but still it was not a bad place to invest. Here also the best place to invest is when the market starts trending and then there is a reset. So if you hear, but it's never clear at the start of the trend whether it's trending or not. So here also there was a lot of confusion whether it will break down and a bear market will come. But you see that you have to take these chances. That's why we are also looking for a bottom formation here, because these are the places either the trend can continue, or if it breaks then a bear market comes. So but if it continues, then this area becomes the area of the highest value. That's why we are looking for the bottom formation, though we are careful of the invalidations also, which will go later on. So now you can see that we were also looking at this metric in our previous report. This is the realized price of short-term holders. Now realized price of short-term holders has proven to be a good support band in a bull run. Like in 2017, you see that this is short-term holders cost basis, average cost basis of all the short-term holders in the market. Short-term holders are around the coins which are held around 155 days or less. So in a bull market, they are the ones, the retail, which actually give momentum to the trend. So we saw in 2017 how it became the support band, and when we lost it and we retested it from underneath, then a bear market started, and you can see how it acted as a resistance. And then when we reclaimed it again here, then a new trend started. So now you can see here also we reclaimed it here around July, September, around between July to Jan, probably in December here. When we reclaimed it, then we had a big huge rally. Now we had lost it here, but then we reclaimed it, we had this rally, and now we have again lost it. This is the present condition. We lost it and we have retested it from below. So I was looking at this fractal also, but right now it has not been confirmed. What I'm expecting it to do here is to reclaim it and continue the trend. However, if it fails, So I will be mindful of this resistance, and if this resistance fails to flip, then we can see how we have to play to the downside. But for now, because of technical analysis and other on-chain data, we are buying 40k. We bought 40k. In our previous report also, I've told you that there will be a swing failure pattern at the local lows at 40k, and that is exactly what has happened now. So when it is happening, it is very fearful, but since that was the plan, we have to take it, and we have a clear invalidation, and it is fruitful till now. We bought 40k, and even lower also I'm buying 39,500, 39,600 goes. I have been buying because I know there will be a bounce. So how I'm playing it is that when it goes up to first area of resistance for me was 46,000, second is 53k. So in these areas I am decreasing my risk by taking some profits. I'm bringing my entry below 38k or 37k, so that even if there is a dip, and this is a temporary bottom and not the generational bottom which we are hoping for, but if it is not, then our risk is mitigated. So that is the idea of a trader. We actually don't care if it is bottom or not. We have to play and find areas of value and de-risk when there are resistances. There are sometimes market is just choppy. I mean, right now it doesn't look like that choppy because it has given a clear swing failure pattern. It lost 53k, it straight away went to 40k. Then there was a bit of a chop after it came back to 48k from 40k dip. So then there was a range up, and then we were looking for a swing failure pattern for it to come down, and then when swing failure pattern happened, we took it again. So this is the long-term holder net position change. So this also we saw in the last report. We were saying that when price was here, we said that it is a sign of early distribution, because this position change of long-term holders, they were accumulating here. They started accumulating, and when this happened, it means that they have started selling, they have started distributing. So they actually distribute in strength, but we saw so we saw that they distributed, they sold some here, but when the price came down to 40k, they have actually started to buy again, accumulate again. So this was just an early distribution by long-term holders at the top. We saw this in our 25th November report, and now the update is that at 40k they have started to increase their holdings. So we can see the total supply held by long-term holders, how it was increasing from here. It started increasing. Their holdings are increasing until the top. It was increasing, but when we reached this top, we saw a bit of a decline, and this showed us that long-term holders have started selling here. And we saw it in the previous chart also, where we saw the signs of early distribution in this chart. So we saw a sign of early distribution here, and now we can see it in this chart also, total supply held. So it started decreasing, and now it has started flattening. Then here it started flattening, and now it has started increasing a bit. This we will see in other charts also, that long-term holders are increasing their positions at 40k, and they are not distributing, they are not selling. This is the total supply held by short-term holders. Short-term holders are also increasing their supply now, but you can see that how they decreased their supply here. They started selling here and panicking here, panicking here, panicking here. They started buying here. See their behavior, how it is starkly opposite. So this is the dumb money, and this is the smart money. So we have to emulate the smart money and not be fearful at the bottoms. Like 40k, we don't have to be fearful. It is an area of extreme fear, and this was the area of extreme conviction, and where the invalidation was so low. Right now we are here, and the invalidation is very close by. So it's all about conviction and invalidation, where to have them. You can't have conviction here. Here, so you're riding and you want to take profit at good places and manage your entries through that. But see the conviction of short-term holders. Their conviction came here back in the market after this whole time had passed. They started having conviction here, and now they're flat. Since the drop, they are not increasing, they are increasing. See this? I'll show you another chart. Okay, so this is, you can see the holdings. They are hodl waves. I've just divided them according to months. So this is the holders the coins which have not moved since 60 months, or whose age is between 36 to 60 months. See these holders who are long-term holders, their supply is increasing. They kept on increasing their supply, and now also they are increasing. Here also you see when there was a first drop to 40k, it was heavily bought by long-term holders, and now you see again it is rising. And here you see 3 to 6 months, these are short-term holders, their supply is just decreasing, and now also it is decreasing. They have not provided any supply, 3 to 6 months. Now you see 3 to 6 months in comparison to 12 to 18 months. Now 12 to 18 months have also started to increase their holding in the bottom. They were relatively flat earlier. So this is 1 year hodl wave. So previously we saw 36 months and 50 months. This is anybody who is more than 1 year. It is very interesting to see that they started distributing here. You can see distribution continued till here, and then it flattened out, and then they started buying, and now it has really starting to increase. Their holdings of 1 year holders have started to increase. You can see in previous cycles like how they were distributing in the 2017 run up, and when the bear market came, they started accumulating. So you saw in SOPR also, whenever we are in the bear market, it is actually the time to accumulate, and bull market is the time to distribute. So now we are accumulating, and this is an area this is a generational bottom. We talk about generational bottoms. Where was the generational bottom in this whole 3-year, 4-year history? There was one here, there's one here, and there was one here. This might not prove to be a generational bottom if it breaks, but for now, these 3 places, this was the ultimate generational bottom, and this was also these 2. So the conditions here were that the supply of long-term holders started increasing. This is the evidence. So we are looking at that evidence. So we are hoping that this particular place is a generational bottom. It might be a temporary bottom, but it has characteristics of a bottom. So that's the thing. So yeah, this is a good sign. Now this is the supply shock. This is a smart money and the whales, long-term holders, their supply increase through a ratio. This is supply shock ratio. This is a metric on Glassnode. And now you see whenever there is a divergence, then the price is falling down and supply shock ratio is going up. Here you see price is coming down, but it keeps on going up. It keeps on going up. So what we see is when there is a divergence, there is a upward movement in price. There is an upward movement in price. Again, we have that. So we are expecting an upward movement in price. This is a sign that the supply is becoming illiquid. What is illiquid is that it is not available in the market for selling. This is the dormancy flow. This also again shows the same. We are trying to understand the nature of supply. Who is holding the supply? So it is the long-term holders. The supply is becoming illiquid. The number of days destroyed of coins is becoming shorter and shorter. So you see here, dormancy has been adjusted. Whenever it reaches this green area, it is an area of high value. This is one of the generational bottoms. This is a generational bottom. This is a generational bottom. So this is a generational bottom area. We are looking for that now. That's why the video is called forming a bottom. And now this is the present condition. So it reached at this green area here, now at Corona drop, and at 29k, and now. So that is the thing. The dormancy flow has reset, and this occurs in deep bear market. So what we have also seen in other charts, I was discussing in this Bitcoin chart, how bear markets are becoming shorter and shorter. So this can be true for these present conditions, that this is an end of this bearish run or sideways run. We already had, this was a small bear market, and now also we are trying and attempting to break out of this range. We are neutral right now, but this is an area of value according to these metrics. This is also the dormancy 14-day moving average. So we have seen that dormancy has been falling since the all-time high, and it's a long-term downtrend. So the conclusion is that in periods where long-term holders accumulate or hodl Bitcoin, the average dormancy is low and the average age of UTXOs increases, lowering the ratio. When long-term holders offload their holdings to short-term traders, the average dormancy increases and the average age of UTXO decreases, raising the ratio. So you see how it has been decreasing. Right now it has reached the green zone, which denotes that the long-term holders are accumulating according. So this is a chart. This also is another way of looking at the dormancy or the age of coins being spent. This is a spent volume age bands. So what they do is they identify the age of coins dominating the on-chain flows on any given day. This can help us determine when and where long-term holders are selling and who has the more conviction in the market. We are concerned with the conviction of long-term holders, smart money, and the whales. And we are also looking at that the short-term holders lose conviction. So that is the area of value. So what is happening is, so this tool cannot be used to identify tops and bottoms, but what it does is it can be used to track sentiment of these various players, long-term and short-term holders. So here you can see that with in 2020 and early 2021, there was a consistent spending of coins aged greater than 1 month. So greater than 5% of the supply of daily BTC on-chain volume began in November 2020 and it ended in April-May 2021. Since bottoming around 30k, Bitcoin has had this swap spike at 40k and another above 60k in October. Okay, and since then swap value have reverted back to 2.5 of daily volume, suggesting older coins are increasingly dormant, especially as prices pull back. This can reasonably be interpreted as longer term holders reducing their spending and thus are more likely to be adding to positions and exiting them. So now here we have seen that the coins which are older than 6 months comprised of 7% of the on-chain volume. Since then, successive peaks of spending from this group have declined, topping at just 3.5% of daily volume at recent highs. So next is the funding. So now we saw that we in our previous report, this is a chart from the previous report, we were expecting it to evolve in this box, the funding, and we were hoping that if it goes to this minus 0.04 is the area of highest value we have seen for funding, and we wanted it to evolve here so that it creates enough bearish sentiment and our bottom formation theory gains more strength. So what we have seen, this was the last week, that was 25th November, this is now at the 15th December around, and we saw that it was neutral price action. And now we see, if we see funding, this is the funding, this is the open interest, we see funding is in a neutralish area, and now it gave a spike down very recently, day before yesterday. That was a good spike to buy, and we want funding to evolve here and be negative. As far as the open interest goes, open interest has been increasing. We have seen that after the ETF was declared and after the miners moved also from China to other places, we have seen open interest to be increasing. We have recently seen a hike in open interest from Binance because all these exchanges which are being shut down in China and for Chinese customers, they are moving to Binance, and there is a surge in Binance open interest. And I'll be looking at BSC ecosystem also. It's looking strong. So this is a negative funding is something which we want. We are getting that. Open interest is okay. And we also see when the open interest is very high and the leverage is very high, that is the time where we'll see it with leverage. So see, this is the leverage. When we saw it last time, it had a dip. Now leverage is at an all-time high and the price is coming down, and we see open interest is also going up, leverage is going up, and the price is coming down. So if you see it in this chart, this is the leverage and this is the Bitcoin price. So it has been going up and the price has been coming down. So this is a condition, as we had learned in our October report, that when such an imbalance happens, the chances of a short squeeze increases, because what it means is that more there is a lot of bear confidence in the market, and their positions, they are leveraging it up. Price is going down and leverage is going up, open interest is going up. That means there are the contracts which are unexecuted contracts which are still pending on the exchanges, looking for the more of a downside. So these conditions are good for a short squeeze. This is one other bullish chart. For reserves, we had seen that reserves are falling, so the Bitcoin is being taken off exchanges. Now in the present, we saw a huge dump. This was a chart from previous month. This channel was there, and now we see that this channel is also broken, and we are at multi-year lows now here. So this reserves are depleting on the exchanges. Bitcoin is being taken out. This is a bullish sign for midterm and long term. This has been actually been the biggest bullish sign on which a lot of people have based their conviction upon. The only thing is that we don't know much about the OTC and shadow deals. However, this is a very important metric, and if we look at it in confluence with others, this gives it a very bullish outlook on the face of it, at least. This is the whale ratio. We were looking at this chart in our previous report. At this stage, it signaled to be cautious because we were at the top, and leverage was also top, price was increasing, whale ratio was increasing. So all these three combined gave us a hint that a drop can come. But now the position is opposite. We see that whale ratio is also high. It has come down from its all-time high. But if you see here we were in this zone only for whale ratio. Whales were very interested in this zone, and the area was the whale ratio indicator was here. Now also it is here. So whales can be buying the dip when the price is going down. It indicates that also at the top. When at the top, we have to be careful because they can be whale games. They are selling and buying the dips, creating the dips. So right now the leverage is going up, price is going down, open interest is going up, leverage whale ratio is going up. So it hints at a short squeeze scenario. Short squeeze, and if they want to dump it more, then we have clear levels of invalidation here. We have taken our positions from 40k. We want to take profit at 46k, 50. That's what I am doing. I'm not suggesting it to be done. You might have better ways of doing it. So I am bringing my entry below my. I'm bringing my stop loss above my entry. So I want my entry price, especially on margin and perpetuals, to go below that. So I take profit just to be careful. However, as a conviction for my spot, I believe this area can hold up. Still, we have to take profit whenever we can find them with that technical analysis. So you can see here whale inflows. I showed you this chart in the last report, and we said that how we were guessing the tops by the help of this chart when we saw big inflows in exchanges. This, and now you see there are no inflows. After this, we have seen this is the inflow mean, and you see how it is. Here there was so much of inflow. Right now we are here. The last dump which happened, also we were just here. So it was not that great amount of inflows is happening. It's just the BTC which is lying already in exchanges that is changing hands. If we see all our previous charts in confluence with this, that is my reasoning of how to understand this chart. There are very less inflows. So this is the net flows now. You can see how net flows, how it was evolving here in this red box above zero. So there were net inflows, and here we see net outflows. This is net outflow zone, and this was net inflow zone. So there are no inflows here at all in comparison to the previous top. So this gives this area, the same area of 40k or 60k, gives us more conviction than it gave it here. So you see this also net transfer volume from or two exchanges. We have heavy net outflow since the top. That's what we have been seeing. Here we saw inflow. Outflow increases as price rises. Now this is a very important metric. Here you see that active addresses at the tops. So we were actually at the bottom here, so giving a bottom signal, and the number of active addresses in the market. In the top conditions, the active addresses reach here. See the present chart we see. This is the same chart. This chart I showed in the previous report, and now in this report I'm showing this another chart. The same chart. How you see how it has fallen down and where it is. The number of active addresses has actually reached this level. And when the top is being formed, where are they? It is here. We are even lower than the point we were in at 29k. See, this is the active address sentiment indicator. This also I showed you last time, that whenever this bounces off this green zone, this is the area of value. See, this is a green zone. Whenever it gets out of this green zone, that is the area of value. This generational bottom there. Now also we are out of it. In this dip also we were out of it. We are just trying to reclaim it now. In this dip we were also out of it. So active address sentiment indicator also hints this to be a good area. So guys, I'm just giving different metrics which are reinforcing this bias of this being a bottom. And if we see some conflicting material to it and some invalidation, then we will not look at these things. But this is the evidence before us right now. So I'm not shorting the market, I'm not being neutral with the market, I'm accumulating whenever I see a swing failure pattern like we saw at 40k. This is the profit and loss ratio. So this is the percentage of people who are in profit. So now we saw that when it reaches 99%, that marks the topish area. We saw it here also. The 99% of people were in profit. This was the area to be careful. And now this green box marks as the bottom area, 83% or 70 till this. So we have reached that area where in these bottoms, this amount of people were in profits. We can go lower if there is a bear market. We can actually trend lower than this, but this is the area where it should reverse if it has to trend this year. If it breaks, then you see how it has. We can go as low as 39% of participants in the whole market who are in profit. Those are very, very long holders. This is the percentage of people in loss. This is just the opposite of that. So we saw how it bottomed here, and now we have actually gone beyond the area of 29k also. The number of people who are incurring losses at the present level are higher than what they were there in when the price was at 29k bottom, at the previous bottom. This has happened because a lot of people bought the top here. 60k area was bought by a lot of people. So they are top buyers and they are incurring losses. This is the net profit and loss ratio, NUPL, and this is completely reset also. And this is at the area of value. This is the fear and greed index. The fear and greed index has reached to 10. We had reached this level during Corona drop, and even the generational bottom, which was here in Jan 2019 in the heart of the bear market, it reached 11, and now we are at 10. So this is an extreme fear area. So the sentiment is similar to when it was at these bottoms. So that's why we are looking at this as to be an area of value. So now you can see that if we want to check out resistances, if we buy this area, then you see this 46,500 is a good resistance, because here a lot of coins had changed hands. So this is one area of high volume which I'll be looking to de-risk all my 40k buys, so that even if it drops, we don't make a loss. This is the distance between 200 MA is Bear's multiple. So this is also bottoming out. You see how this green area is the area of value. How far the price is from the 200-day moving average. This is what this line signifies. So when it is at this green zone, it is the area of value. When it is closer to red zone, it is the area to be cautious. So right now we are below the 200-day moving average, and how long we will be below it, and that has to be seen. This is just a fractal. You can ignore it. I'm just experimenting it. This is for the bearish scenario. If we really want to just give last pump and go down. But then also that's why we will de-risk in these areas. So it can continue also, so we can jump back in. That's how I am playing. This is a death cross chart. So you can see how many times there has been a death cross where 50-day moving average goes below 200-day moving average. So you can see here also the death cross happened. Here we saw this formation happen. This looks very similar to this formation. You can see how it went up, down, and now this area we are getting the death cross also. So it might be possible we get this formation, but that will be too easy. That just happened right in front of our eyes. So now here also we see that death cross had happened and we went up. Here also you see death cross. Now this is the golden cross. This is the death cross. Again you see this is the death cross. So yeah, the death cross is happening right now. So this chart is like, basic distribution and accumulation. So you can see 29k area, 40k, 60k, back to 53k, 40k. So we have to see, like, this is the pattern. We can expect it to be accumulation till the time it's broken, the structure is broken. Here is the chart also of the time after the halving, how the cycles have progressed. You can see that there has been a trend line which is directly drawn from the middle. It's very simple and basic level of chart representation of the cycles. The 2011, 13, 17. You see that there is always a touch between the median line. It's just the median line. Now we see in 2021 this is 29k bottom, and now we are again touching this trend line. This trend line is also the fib. If you want to see this, so now I'll just show you through Discord where I shared my entries when I was looking for this swing failure pattern. Now we were looking at technical analysis also, and then we saw this total chart, and it was shared that there was a div forming on the total chart below the September monthly, which is important resistance. For the first time we looked at the log bands also. We saw this 40,200 level to be an important level of support. So this was after we have seen the on-chain data and other fundamental analysis. We start looking at the technical analysis. We saw this also. This was the amount of shorts being formed, and this is the log band. So it's a long high time frame supports and resistances. We are at this support right now, 40,200. So when we reached here, we saw a div form on total, and then we started looking for higher beta odds. As I mentioned, link when BTC was at 40k. We were regularly looking at these also, and then link was showing strength, and then finally we got a potential for a swing failure pattern on the total, and it was also bouncing from this VWAP. This is a high time frame VWAP. So this was shared live on the Discord with the log band bottom also. So we saw a bounce happening from log band. I entered here only at 40k, though it came down back again to test this support. We also saw funding was neutral at the drop, and then we see that the div which was formed, it actually gave a bounce. So we had talked about all of this, and we were waiting for a swing failure pattern in our 25th November and 9th December report. In both these reports on 9th December we had talked about this. So now it took about 3 weeks. So we don't want to get time corrected, and we want to stick with our own plan. So here is so I had talked about the sweep of the local lows at 40k for the bottom formation, and I have been following that plan. For invalidation of plan, we even Sia mentioned various scenarios, so we will keep those in mind. Now we saw that the price was attempting to turn this into support. This is a high time frame log band support. We saw that how this was supporting at 29k also. So that chart we saw of cycles from halving, that is also showing support if we draw that median line which is cutting these two bottoms. So we see that this is also a logarithmic line and it is providing support. So we were reminded of this chart of supply shock ratio, and I had explained it that supply shock ratio is currently displaying a bullish divergence, which was also observed back in August and September. The reason behind this is that illiquid entities with little to no history of selling are taking over the supply from liquid and highly liquid entities. So supply is getting illiquid. This was shared at the bottom. This was also shared at the bottom, the dormancy, which we have seen in this report very clearly. And then eventually we saw how the liquidations occurred when the Fed was announcing, because Fed had announced the same rates which the market was expecting. This is an important chart. This is an accumulation fractal, which I'm hoping that this will manifest. We keep an eye on funding, and we also look for higher beta alts. Now this resistance at 3-day level is also a 200-day simple moving average. So this is providing resistance right now. We need to flip it. Yes, so guys, that's the report for today. In the end, I will just say that the options max pain price is at 48k. The resistances at 53k and 46 to 48k are important. Be mindful of those, and also be mindful of this resistance, 200-day SMA, then this yearly level, and 48k level, which is the maximum pain price. So thank you for listening and watching this review. That's all for today from our side. Thank you.